right, so July 7th, 4:30 p.m. Eastern Time. Today we're just going to cover a couple of the trade setups that we've had this week and discuss how the area came together across multiple time frames for the entry, cover how we exited, why we should have held, some of the reasons for the early entry, and kind of go over any mistakes that were made. So we'll start by going over the daily chart. So what we had here, and this is the daily chart of the 6E, the euro. What we had was a break of the main uptrend line that we've been tracing out for the past 6.5, 7 months. And what I did was connect from the lowest closing price, not the closing price, but the bar, the low of the day on which we had the lowest closing price on the daily chart, which was right here. And that was the 30th of November, 2015. And then on this day, we had some sort of report, probably a Fed announcement or something, which kicked off the next uptrend. And then here, rather than connecting to the wick from the report that we had here, so that was March 10th, and this was the 3rd. Yeah, anyway, both of these had to have been report days, some kind of report. So rather than connecting to the low, on that wick, on that massive wick, I'm using the low of the bar on which we had the lowest closing price, which was this bar and then this bar. And that gave us the long trade that we took here, which was over a 350 tick winner. That was the last massive trade that we had to the upside in the euro. And then that same line projected forward through the break here is what gave us this kiss goodbye trade here. All right, I want to say that was a 50% retracement as well. Yeah. So that was a little bit over a 50% retracement of this last down move, and maybe a 38.2 from here. Yeah. All right, so we had a fib confluence zone there as well. We have the extension, which is this 38.2, and that's from the prior downswing that we had here. All right, let me delete this one. So that's connecting from the high up here to the lowest closing price, back to the swing high. That gave me the 38.2 extension here. We have the 38.2 retracement from this high. So from connecting from that high to this low gives me the 38.2 retracement here. And then connecting from this high to this low gives me the 50% retracement. They don't quite overlap, but they're within several ticks from one another. And then we can simply delete all of the other lines. All right, and all of that coincided with that kiss goodbye line. If you would have drawn it from the ultimate low here to that low, you can see that actually gave us the swing low right here, right there, but it didn't give us the kiss goodbye line. So we broke out of that. That's a typical kiss goodbye. You're in an uptrend, you break that uptrend line, and then you pull back to it. It's just a typical textbook setup right there. So what we were looking for was to find that high, but when we came into the trading room, getting ready to trade and getting set up, that high had already occurred by 3 a.m. All right, so in that case, I began looking for the first tradable lower high. Okay, so I want to see an impulse move down and then some sort of corrective wave back up, preferably a nice symmetrical ABC, which is of course not what you're going to get every time, but that's what we would like to see, and that's actually exactly what we got right there. So that's the reason for the short. The ultimate main reason is that kiss goodbye, the reversal down from that area, and then looking for that higher low, lower high. So impulse off of that area, corrective wave back up to make a lower high. That's actually tradable. All right, so as we go down one time frame to the 240-minute chart, you can see we have that swing high. So that's the swing high that we're talking about right there. All right, and that bar closed at 5 a.m. The high occurred, I think, right at 3 a.m., just before 3 a.m. And it was kind of a blow off top, and we'll take a closer look at that. As far as anything larger, I really didn't mess around with this too much. I can't remember if we had any other larger areas that were aligning with that high. Yeah, we did. We had that that median line right there. I think was actually from the secondary low. Yep, that's what it was. Okay. And I want to say it was simply a trend line from low to low that we ran into as well. That was the previous high. So that was on, I think that was on the 4th of July. No, that was on the previous Friday. I'm not sure if we traded that or not. I think we traded that high on Friday. Not sure. Anyway, we'll go back and look at that. But
which one?
This swing high on Friday.
I don't know.
9 o'clock. Anyway, so at this high, we had the major area from the 240. Didn't quite make it to that, but that's because it was running into that kiss goodbye line and this median line. Let me just go ahead and delete that so you can see it better. Let me bring this back up. We'll take snapshots of this. So we're looking at this swing high right here. And this swing high right here. Okay, so we had the median line. I'm simply connecting from low to low. That gives me the channel line here, which we didn't make it back up to. We made it up to it right here and then reversed back down a little bit and then finally came up. And once we broke this high, we got that kind of a blow off climactic action move right up into the median line to the tick. And it stopped on a dime there and then turned back down for an impulsive move down. And this is actually where we got short right there. Okay, so now going down to, let's first go down to the larger tick chart. And then we'll come back to the hourly. So what we were looking at the time were the different profiles of the previous major swings. So just looking at the swing down, which is that Brexit sell-off, which I believe I want to say stopped me out of that last move. Yeah, so we got long here and here, exited here and there, bought back here, exited there, bought back here, took one off just before that big down move, and then got stopped out of the last one as it sold off. So that entire move down there gave us the value area low at this price right here, which you can see it came up to the tick right there. Came through it by about 3 ticks. All right, and then when looking at these individual swing highs here, if we were simply isolating just those swings right here, if we're looking at simply the upper part of these two swing highs, where is the point of control from, oops, from right here up? It's right there, right? That's what we had marked out. So let's go ahead and delete that one. We've got the value area high. The value area low right there. That's one tick lower right there. So let's go ahead and delete that one too. And it looks like, yes, I had sold the previous high. I think that was Thursday, yeah, the 29th. That was Wednesday, actually. And then Thursday, yeah, this was all throughout the night as I was building that presentation for Thursday. And then I bought the low. So I sold the high, bought back there, bought the low, sold the high there. And then I think I got stopped out on that last one right there. Yep. Sold it just a little bit too early and then got stopped out just before the big move. All right, so anyhow, up at that high at 3 in the morning, that's Tuesday morning on the 5th, you can see we had come up to the top line being that value area low of the big swing down. All right, and then we get this impulsive move down here, which is really a pretty big move. And then we get this really nice and symmetrical ABC move right back up for, I believe, a 61.8 retracement. Yeah, 61.8 retracement. Nice ABC move back up and right into the point of control of those previous two swings here. So we had already hit it once. We came through it, broke down below it, hit it again here, get the B wave down. So we have a nice little A, B, C after our little impulse move down. Let me go ahead and disconnect from data so it stops dragging. Okay, there we go. All right, so all I've done is I've connected from the low to the low here, and that gave me that high perfectly right there. Okay, and that's what we reversed down from early in the morning. And then when we come to, we're about right here when we get to the computer. And by the time I have everything drawn in, we're literally right there at this price. About right there. And then we're creeping up into that high. So let's take a snapshot here. Okay. And then our hourly, which is right here. And yeah, I don't believe I had anything new as far as areas on the hourly. It would be the same exact areas that you've just seen from the 240 and then that minute chart. I mean, here we did have the median line coming up and we did reverse off of it right there and right here. But we didn't quite make it back. I guess we're about 4 or 5 ticks away from it right there. As far as anything else, I don't think we have much of anything else except for that midline right there. So we didn't make it anywhere near to this channel line, which is another sign that it's weak. But one thing we do have on the hourly chart is the new triple divergence signal that I've been working on the past 2.5 weeks or so. So I'm sending the beta version out this evening, and then after a few days of testing and any bug fixes, then we'll send out the final version. So that's double divergence signal. So we're coming down in divergence from here to here. And then we're stepping down again. At this swing high, it's lower than the previous. And then from here to here, we're stepping down again. And this swing high is lower than the previous. So we have your double divergence signal here and then triple here. And then, of course, we get that blow off top and then come down in a little impulse move on the 5-minute chart. All right, so we did make it back to the midline of this channel, right? You can see we reversed off of it here and then here. So we're definitely respecting that slope. We blow through it here and then pull back to it one more time there and then touch it perfectly to the tick for that last swing high, which is where we took the short. All right, so we'll take a snapshot of that and then come down to the 20-minute chart. And on the 20-minute chart, we really don't have anything else that you haven't already seen. We're coming up to the prior week's high, but of course we've already blown through that on this bar. So really the same exact channel that you just saw on the hourly is about all we have on the 20-minute. And that's just from low to low. Now we may have, let's see, just looking at this swing high. I'm not connected to data. Oh, it's already got it. Nah, that's nothing important. So what we do have is that reversal down and then our nice ABC, which you can start to see on the 20-minute. But because it's not quite wide enough, we only have about 13 bars. We can't say that this is coming from the 20-minute chart. Essentially what we're doing is we're basing the trade off of the reversal that's occurring from all of the higher time frames that you've seen. So we have the daily chart. That's the main area. The kiss goodbye. We have the median line. We have the ray from this prior swing high. So that's 1, 2, 3 areas from the 240, 2 from the 240, 1 from the daily, and a fib confluence zone from the daily. And another channel high from the larger tick chart. We have the value area low from that massive swing down from the Brexit vote. and we have triple divergence on the hourly, and if I remember correctly, there was a trend line from back here from high to high, but we don't need to include that because we already have so many other areas. All right, so that's essentially what we're trading. We see the big reversal down. We've already missed it. So now we're looking for the re-entry at this point. All right, we want to see that there's an impulse and move down, you know, a very strong set of waves that aren't overlapping coming down. And then we want to see some sideways action into a corrective type of a move on the 5-minute chart. All right, because this trade is occurring from the 240-minute and the daily, then we need to see a pretty decent channel on the 5 that we can trade. And then of course the confirmation of the volume on the 2-minute. All right, so that's what we have. So now we're looking for kind of the re-entry move, which is occurring from this midline here and this corrective ABC finish, which finishes right there, obviously. All right, so now what do we want to do? We want to move down to the 5-minute chart. Let me bring it over so we don't have that task tray at the bottom. And there we go. So what I've done here is I've run a profile from this blow off top. Some kind of news, I'm sure, came out in Europe at 3:30 Eastern time. This is 2:30 Central time, obviously. So something came out, I would imagine, or maybe it was just the sheer fact that we broke those prior swing highs and ran so many stops that all of this volume came in. But you can see that last really wide-ranging, nothing but wick bar that opened and closed at the same price, and yet has this massive tail, you know, whatever you want to call it, shooting star or whatever. But it's showing us that we've run straight up, immediately found tons of resistance and supply, and it's being pushed right back down. And that's, of course, an extreme churn bar, as you can see right there with a big pink relative density bar. And next bar is a big churn bar, and then it starts the big push down. So all I did was run a profile of those 1, 2, 3, 4, 5-minute bars that are making that topping pattern there. And that's given me the point of control of that swing high right here. And that's it. So when we came back before we opened the trading room, here's 555. We had hit that, and we had even more supply come in on that big extreme churn bar. And then we get a selling climax to kick off this next leg down right there. And then how do we stop this at the low? We stop it with a churn bar, which is a major spike in the relative volume, and that's upwards of 125, 126% in the relative volume. All right, so what we want to do, identify that impulse. That's pretty obvious. Waves are not overlapping. It's a fast move to the downside. It's a pretty large move, actually. Whatever that means, 560. I really have no idea. Let's have a look here. This thing is so bizarre. 245, so it's over 100 ticks. Over 100 tick move to the downside. So that's a pretty nice reversal in the euro. All right, so now that we've identified that, that's the major area that we're trading from. So now we're looking for the re-entry to the downside. So what are we looking for? We're looking for that nice ABC move, right? Which you can see there. We really don't even need the median line, so we'll just connect from low. We could connect to the extreme low, that's fine. It only goes through it by a couple of ticks, where we could connect to that slightly higher low there, and it's just about perfectly to the tick right here. And it just barely breaks above this prior swing high. So when we tick that out on the 2-minute chart, I went ahead and sold one market and then put in a couple of other orders to get filled on a limit if it would come back and test that high again, which of course it didn't. So what I did back here, and let me just go ahead and delete this so you can see it better, and I'll delete that line as well, is I connected from the overnight high, which we had an extreme spike at and a nice extreme churn bar. So from high, rather than the high of all of these wicks, the high of that slightly lower high, the wave 2 high, connected baseline from high to high, found this swing low, which gave me this swing low, so I know it's a good channel, and then came back up to that upper median line, which it almost came to right here, but not quite, and then came back and slightly overthrew it right here on bearish divergence in the RSI. So that's just kind of a little added bonus there, the fact that it is slightly diverging in momentum. In all actuality, the fact is this momentum move is actually weaker than this one. It's just that the RSI is, because of the nature of the period look back, it's identifying this as momentum, but in fact it's really not true price momentum divergence. But nonetheless, we get a beautiful ABC, which gives us that really clean, nice looking ABC correction for the lower high reentry on that reversal. And of course, we were expecting a third wave down, a big third wave down, which we did indeed get. And I just happened to get out way too early. So we'll finish up going over the rest of the reasons for the entry and then come back and talk a little bit about the exit and why I should have waited. The fact is I only entered one contract, and it's really hard to manage a really large winning position with just one contract. Had I have entered 3 or 4, I would have taken one off at a break of this low and then managed it down a little bit further, taken another one off, and then let the other one ride until reaching that main target down there, which I think was actually achieved on this bar. But we'll come back and go over that in a minute. So now what we want to see is some sort of confirmation on the tick charts. So let's see what we have. We have the larger tick chart right here, which is a 932 tick. And all I've done is run from this higher low, and the only reason I'm doing that from this higher low is because that's what finds this swing high better right here, and it just seems to be the right slope for this channel here. So I'm using the secondary swing high as opposed to this lower, and that's something you'll see me do quite often. I'm either using the exact low or the higher low, the exact high or the first lower high. All right, and that median line, which is acting as support in here, resistance in here, resistance here, is giving me resistance here as well. And this was the actual entry on that bar. right? So nothing spectacular really on this chart. The reversal bar, after I entered, this bar ended up closing down on increased volume per tick. So that was just added confirmation for the trade after already entering. So now going down to the faster tick chart. I'm sorry guys, I'm on the wrong chart. Okay. Let me go over that again. So I was showing you the much faster tick chart. This one is 4 times larger than the one you were just looking at. This is the 932 tick. And just to repeat, what I've done is I've gone from, rather than using the extreme low here, let me just draw that in. There you go. It does end up giving you the high right there. But what I was doing was using the higher low for this swing high, which seems to be the better slope for the entire move, as we're using the median line as support in here, and then resistance in here, and resistance here. And you can see the same amount by which we broke it up in here is the same amount by which we broke it right there and right here, which is where the ultimate entry was right there. So after we reverse down, we get the nice ABC back up, and it's on this median line. Now that's not anything really spectacular, but it's just a kind of added bonus. We did put in the reversal bar here on increased volume, which you can see here, increased volume per tick. But by the time that bar closed, I was already in the short, and that simply just acted as, confirmation that it was indeed going to be moving down. So we like to see that on reversal bars on the tick charts, increased volume, typically a climax or a weak climax to kick off the next, in this case, push down. And then that's what happened. We came on down. So now to go to the faster tick chart, which you were just looking at, all I've done is draw from the previous high, say the penultimate high to the ultimate high, and that has given me the median line here, which acted as resistance. The lower median line acted as support. That nice churn bar from that one, nice churn bar from the median, the center median line, and then again we came back to it right there. Okay, and that's about 45 minutes after the open. The 6E opens at 7:20 Central. It's essentially trading, about the same number of contracts. Most of the overnight session anyway, but the quote unquote open at the CME is at 7:20, which is right here. Okay, so that's our nice little ABC, and of course that's tracing out a symmetrical ABC pattern right there. I think it actually might even be pretty close to completely symmetrical on the tick chart. Yeah, pretty close. So that would be the symmetrical move. So this move from here to here would be almost identical to this move. You see? And then we broke down pretty quickly. That's where I entered, right at the high there, and just didn't quite get filled on the other 2 contracts. So anyway, let's see now for the 2-minute chart. So, and you guys will get this template when I send out the next update in the next few days. But this is putting it all together. So all the lines that we've drawn across all of the charts, they're all coming together on this one exact bar right here, which is also volume divergence on the 5-minute. So it's being read as volume divergence on the 5. It's really kind of spread out. I mean, here we do have, it's really volume divergence on the previous bar. So let's not even worry about trying to call that volume divergence. Essentially what we're doing and what we have here is a slight break of the prior high. It's a nice symmetrical move, especially on the tick chart. And we're coming back into the point of control of not only this swing high, but of those major swing highs way back. Okay, right after the Brexit report, that giant ABC up that we did right after the Brexit report, which I think was over a 400 tick move. The move down was over 1,000 ticks. So we've come back, ticked out the high, ran all of these stops behind this. As you can see, we had a lot of supply come in on that bar, which you can tell is denoted by the extreme churn bar there. And finally get, what, 3 churn bars in a row? We got 1, 2, 3 with steadily increasing relative volume and relative density. And then finally the big down bar, which is the reversal bar. We're going up, 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 and then reverse to down. That's the reversal bar, is also the highest volume. It's a weak selling climax as it's coming down on that bar, but it's kicking off the new down move. And also churn in the relative density, telling us that there's a fight going on between supply and demand. Essentially what we're doing is we're running these stops, and big boys are building their big short position and then getting ready to work it down, which they do nicely right after. Okay, so at this point, if you missed it there, you always have, well, you don't always, but oftentimes you'll have the reentry attempt from the upper median line, which you have there. I think it looks better on the tick chart. It depends on whether you want to connect to that extreme wick up there at the high or not. So let's go back to that tick chart and see if it doesn't look better there. So simply connecting from the previous high to this high, and we get the upper median line hit perfectly right there on a minor spike in the volume per tick, which is that bar right there. You see, so if you missed it here, you could have re-entered here. Although, you know, the tiny little retracement trades like that is not something I'm particularly interested in. Unless, of course, I'm expecting just a massive move and I've completely missed it. Then I'll think about taking something like that with a very, very tight stop, like 5, 6 ticks. So coming back to the 2-minute. We start coming down nicely. And then, of course, I'm looking for a reason to exit after a break of the prior swing low. We were talking about it all morning, how I'm expecting a big third wave down and a complete reversal in the euro. But because I only had one contract and I didn't want to risk riding out a massive retracement and potentially getting stopped after making so many ticks, I went ahead and exited when I saw this bar come in right here. Which, you know, I should have known better. Most of that is simply stops being run on a break of the prior swing low, or breakout traders trading short, and then, you know, somebody's trying to trap them. Excuse me, which ended up failing. And I got out right when it was about to roll over. And then, of course, it did roll over. And from that area, you would have begun looking for your next reason to, you would have been looking for your next target, which would have been, at this point, much, much lower based on your larger channels, which would have been defined by those tick charts. Let's go back to that tick chart. So now as you begin managing this trade, first of all, you would have identified the fact that, well, that's what we did, that we were in a third wave, and where's that third wave likely to go? Let's actually go back to the big hourly chart. All right, so we've got triple divergence. This is clearly corrective action. This is a long and drawn out complex correction. We've been tracing out within a channel for the entire length of this massive correction. And kind of what I was expecting, or what I was thinking, was, well, maybe this is just doing a really big, massive triangle. And maybe now we're going to come down in the D. And if we come down in the D, then I'm expecting to likely break this low, but not this low. So stay above the B wave, but potentially break this B of the C. So if that's C wave, then this would be A, B, C of the C wave. All right, so I'm thinking of coming down in 5 down, 3 up, 5 more down. All right, either that, or it's simply just an ABC correction where the C didn't take out the high. So just a kind of a flat that didn't break above the A wave. And then the next move is way down to 1.08. So I was thinking, well, that very well could be the case, and we are probably coming down now in 5 waves. So I got into the end of the second wave correction, and now I'm looking for a third. And where does the third wave likely come down to? 161.8 of wave 1, right? Just typical Elliott wave stuff. Nothing incredible. It's stuff you see all day long, all the time. So ultimately, I'm looking for a move down to 111. And that would have been negative 21. So that would have been about 175 ticks, let's say. Or 220, I don't know. So about 200 ticks. But once we took out that low, because I only had one contract on, I just simply got out of it pretty early, actually. And let's see, is that the low? Yeah. Yeah, so as we're looking for the next wave down, I'm thinking, okay, 161.8, very likely. Where else would we be trying to work our way down to? Well, let's go ahead and delete all of this. And draw in some other channels here. So I'm thinking at least to the bottom of this channel. Even if I'm wrong, we'll probably come down to the bottom of this channel and then put in a C wave low and then head back up, right? So I'm thinking, well, okay, at least to the bottom of that channel. That's a pretty good ways away. What's it going to look like when it gets there? Well, we can go back and look at that on the 5-minute chart. But then, of course, the next area would be where the warning line intersects the lower median line. And that was my main target on this trade. And that, I think, was not quite to 161.8, I believe. Not quite. Or no, it was right at it. Okay, yeah. So yeah, that was the main area for the exit on this trade. It's kind of where the fib is intersecting that lower median line and that warning line. So we did an entire section on the warning lines, which you can go back and watch. And this is one of the common patterns that we see occurring over and over and over, is where that warning line of the channel is intersecting the upper or lower median line. And that's something we see, every single chart consistently. So that was the main area. And when we go down to the tick charts, then you can kind of fine tune some of the other channels, but that was essentially the major target there. And then of course it actually even came down quite a bit further after making that fourth wave up. Came down another 175 ticks, something like 75 ticks. So then on the big tick chart, if we're coming down and we're looking at how this is going to trace out, we're looking to make it down to the bottom of the channel, which was, much further away than where I exited. I exited here when I should have been holding for the lower channel line or the median line or both where they intersect, but it actually broke right through that channel. You did have a churn bar right there, and it did look like it was going to stop on a dime right there and turn back up. Very high volume per second. We rushed right down there, found some support, but it just kind of went sideways for a little bit and then came right through, only to make it down to where the warning line intersects the median line, which is right there. And then what did it do? It came right back to the upper median line and the channel line, the shadow of the channel line, and then this prior median line, which is from the higher low that I was using back here, right there. And then came on down to where? To the trend line of that higher low that I was using. And then finally stopped and turned back up. And then of course we get that beautiful ABC back up into, I believe it was yesterday. Yeah, how did that work? That was the one we missed, right? Or the one you got? Or no, you got it, and then that was when you put in the cell ask and didn't get filled.
Yeah.
Yeah. So anyway, yeah, came down perfectly past most of the targets that I had, and then right down to some major areas. So this could have been managed a lot better. It would have been much easier to manage it better had I put on multiple contracts like the size of my account calls for. But at any rate, I'd say that's about a wrap on that one. We could go back and look at the 2-minute chart of how that kind of played out a little bit. This was the long we took today and the 6E. And then I got turned around and messed up trying to trade that report in crude and ended up down about $600 today. Let's see, what day? I guess that was the down move yesterday. And there it was, yeah. So let's delete all of that. And there, of course, is the high. We'll draw from the wick first and then draw from that lower high. So that's giving us the upper median line there. That's your typical Allen Andrews trade. You see that on monthly charts, weekly charts, daily charts, hourly, 240, every different size tick chart, all the way down to a 1-minute chart. So that's your typical Allen Andrews median line trade. And then we'll go from major high to where does it come down to but where the warning line intersects the median line, which we just talked about, we see all day, every day. We did a training session on nothing but those signals. And that's where they both came together with time and price right there, which is just before the final low. You see. So should have at least held to this bar at a bare minimum. And of course, we broke right through that and then came right down to the next target. So if nothing else, we did essentially what you could call a one-to-one using both time and price rather than just price, which, fibs are only looking at price independent of time. Channels are looking at both time and price, which is why it's both a timing and a support and resistance tool. It's kind of giving you an idea as to when in time price is likely going to reach a particular area, which is why it's so incredibly useful, because you're combining both time and price, which is what Gann was all about. It's what he was always trying to instill in people's minds, is combining time and price in your analysis, which is about the only thing that I've seen that actually works. So anyway, that's that signal. We've taken up the entire hour just with this, and I am about tired of talking. We could go over a couple more examples here. Corey's built these out for us. Let me just kind of start from the top. So this is 7.5. We're talking about this low, right? Yeah.
Yes.
So this is the low that we put in yesterday, which we had that kind of 3 drives to a low, depending on whether you're wanting to call that drive in the middle a drive. I would. I mean, it is about an 80 tick move. So we had 1, 2, 3. You end that on double divergence there on the hourly chart, and a major spike on the hourly chart. And of course, we're doing the same exact thing with time and price, intersecting that lower median line with the warning line of the trend channel. They both come together perfectly right there. You see that? And what else? We've combined the low to low and then run that channel back to the end of this move, the furthest point, the widest excursion, if you will, like Moores would say, the widest point left perpendicular of the slope of this line, and that's giving us the widest point to the right for the first warning line.
Is a nice indication of how that set is in play.
This one right here?
Yeah.
Yeah. Okay. So Corey's saying because you can see this rejection here, and of course this is using hindsight, but that's kind of the way market geometry works. That's kind of validating the swing point as being the anchor for that channel. And then of course, what do you have at the low? But a big fat nice churn bar. And then you get that higher low on that same line, which is also found using so many other swing points all throughout here. We get that really nice hit on the lower median line on that higher low, which I'm sure is in here somewhere. So again, Corey's used the swing high here to swing high down to the swing low. That's giving us another 100% warning line at that area. And then on the 20, from low to low, not using that report low, but the subsequent low to low, that's given us these 3 lows here. And then of course, at the end of that, what do you have? You got a selling climax followed by an extreme churn bar, an attempt to push back up that fails, and then the next bar is that extreme churn bar again on double divergence here. Double divergence. Okay. Selling climax, attempt at moving higher. Selling climax, stronger attempt at moving higher. It's ready to go up now. Come back, test these lows, break through them, find demand, and then push back up. So this was the one that we missed. this higher low right here. I wouldn't have tried to trade that ultimate low. Tim, I believe, did. But then this lower low here, higher low here is what we missed when I was looking for the entry in the ES yesterday, which I missed by literally 5 ticks. So again, lower median line. On the other channel, you can see all the other warning lines coming together with this lower median line, and triple bullish divergence on this larger tick chart. Let's keep going down.
That's a trend line and
5 minute
50% warning line.
Okay, that's for the ultimate low right here. All right, you can see all that's coming together. Trend line from low to low. That gives you the next low perfectly. You've got pretty incredible volume divergence right here as we're up around the 400% mark for the end of that massive selling climax low, and then just kind of sideways to up and down into the final low, which you get the final sell-off right there, which is decreasing every time. So major sell-off, attempt at moving higher. Major sell-off that's less than the previous one, and then another attempt at moving higher, then kind of sideways to down, with the final attempt at moving lower as it breaks those lows, and then you hit that area of an influx in demand as everybody's buying to try to work this thing back up, and then you get that really nice sign of strength, and then your higher low right here. Now that wasn't the major higher low that I would have traded. The major higher low that I would have traded occurs about right here. Okay, and that one was found perfectly on a trend line from these two lows, and then a lower median line from this low and this low. Okay, let me just bring that one up real quick.
I actually sent you a different document that has all the market geometry for the high.
Okay. For the high?
I think that was this morning.
Okay, I'm just going to go over this one more example, then we'll call it a day. So this is the same area on the 5-minute chart right here. And of course you have pretty solid volume divergence right here at this low. Everything's coming together right here on that exact bar right there. All right, and then you get that nice drive up and out of this area. So this is our little accumulation. Pretty nice accumulation there. And I'd say this whole entire thing really is. And then of course we get the big push up and out of it, which you can obviously see. And that's about an 80 tick drive up. But after a huge swing down. So anyway, how do we find that major high or low? How do you do that? From the penultimate low to the ultimate low. It's always going to give you, if you're going to be able to trade it, that's going to give you the area that you're going to trade. And that's from low to low. Dun, 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 dun. There's your first hit of it. And then your second. And then what else is this but from low to low? It's the trend line, of course, because you're riding that lower median line, but what else is it? So look at that. I should have been focusing on this one rather than on ES. They were both equally good trades, but the CL just happened to go, what, 200 ticks in the next 3 hours? So down 200, up 200. Or down 300, up 200. So anyway, yeah, every bit of 320 ticks it came down. And then right back up 200 ticks. So we connect from low to low, and look at what it does here. It breaks out of that channel line, so we know that we're in a very strong move, obviously. And it comes right up to the upper median line here, and then here, and then busts through the lower. So we're going to look for the next area where we have a warning line coming together with price and time. And that happens right at the exact moment where price intersects the baseline, the trend line from low to low. And that all occurs with our major area that we always use to find higher lows, or even slightly lower lows sometimes, depending on if that lower median line is sloping down or up. In this case, it's sloping up. So we have a pretty good idea that we're going to be putting in a what? A higher low. And then what do we have up at the top there? I mean, it's to say that it's, I still have people write in occasionally. Well, they say all sorts of weird stuff, but you know, how is it possible that you just draw stuff on your charts and that helps you trade? That's stupid. Well, I guess I'm just an idiot, but this stuff is, you see this happening all day, every single day on just about every single chart that you have. 6E has been respecting the market geometry like I've never seen a market do lately. And I think that's pretty incredible. But this kind of a thing in crude, you know, it happens at least a few times a week. So to miss one like this is to make a pretty severe mistake as far as I'm concerned. I just happen to be, you know, paying attention to the wrong market at the time. So hopefully that sort of thing doesn't continue to happen, but that's one that we really can't afford to miss. And then you see that line up on the 2 minute, and it's just incredible. So you have, let me show you. It's frozen. So you have your bottoming pattern right here. That's where everything's kind of bottoming out, coming together. And then of course, to kick off that new up move, you get that huge increase in both the true volume, which is on top, and then the relative volume on the bottom. I just kind of had that true volume on top just to have an idea of total number of contracts, just to kind of get a feel for, you know, the average number of contracts that are trading typically throughout the session on this 2 minute chart. So let's draw that in. That's your first hit of the lower median line there. From low to low. Right here. I'm testing out the beta divergence indicator. So that's what this is. So you have your initial sign of strength here out of the low, and then you're coming back to test this swing low here to make a higher low on that lower median line. And that last bar down to just barely take out the previous bar's low is very high relative volume. It's over 320%. Last little selling climax there before the selling dries up, and it just kind of drifts as they allow the selling to just kind of wane and then build their long with limit order longs. And then once they get tired of waiting, then pop it up real fast and then get the public involved on that bar. And then once they bring it up, they'll start exiting some of that, work it back down, build some more longs, which is occurring on this bar. As you can see, you've got your selling climax followed by another selling climax, which is both wide-ranging and high volume per range. So it's such a huge high volume bar. Even though it's wide ranging, it's still higher volume per range than the past 16 bars. So you have, both the selling climax and the big boys sitting there with their bags open, absorbing all of that selling into that lower median line there. And then how do they kick off the next uptrend? With a big climax bar, big buying climax back to the upside. Of course, it's not a true climax because it's not at the end of an up move, but it's what we like to see to kind of kick off that next big uptrend back to the upside. Mark is asking, how do you turn on the info panel for the bar panel? You just hold down the middle mouse key, the middle mouse button, middle mouse wheel. You just hold that down. Just make sure you're not selecting anything on the chart. You can go to properties, your chart properties, and set this to false so that you can't accidentally click on anything on the chart. Only thing you'll be able to click on, if that's false, the only thing you'll be able to click on are the actual drawing objects themselves. But you shouldn't be able to select, the indicators by accident. You should be able to just middle mouse click anywhere and get your information. So, yep. Mike is asking, of course, they say moving averages work. Oh, yeah. Everybody loves those. Good old moving averages. Averages from averages. So Bill is asking, can blue X, magenta triangle, and yellow diamond be used in Market Analyzer? Yeah, but you have to load enough bars in the Market Analyzer for it to work. So you have to load the relative number of bars for the number of days back. So if you're using 10 days back, you could set it to 4 days back and then just load. You typically want to load twice as much data as you have the look back set to in the relative volume. If you're looking back 4 days, which is really probably not quite enough, I do that on the 2-minute chart just because I'm looking at true volume as well, and just to kind of speed up Ninja. But if you're looking back 10 days, you typically want to load at least about 19 days of data, 18 days of data, typically about 2 times more for the look back on the chart as you're loading into the indicator itself. So, divide 240 or 1,440 minutes by the size of your minute bar, and then multiply that by the number of days that you need, and that's how many bars you have to load into the Market Analyzer. I build it quickly. So Market Analyzer, columns, indicator, relative volume. Let's say I want to load a 5-minute chart. I need 20 days back. 1440 divided by 5 equals 288 5-minute bars per day times 20 days, 5,760 bars. I don't know if Ninja's going to be able to handle that in the Market Analyzer. I don't know. I'll set it to true. Calculate a bar close true. Extreme spikes. 10 days back. Let's set it to 5 days back and then set this to 2,800. And then we don't need the paint bars. Turn the paint bars off. All days. We don't need churn bars. We don't need any of those. All we need are the extreme spikes, which are right here. So we don't need the major. We don't need the minor. That's going to cut down on the CPU or the memory or all the above. So show extreme spikes. We don't need any of these other. So extreme spikes. And then I need to set the plot right here, the plot. I need to set that to extreme spike. See, there's one for each, so you'll have to do this twice. So extreme spike at the high, and that means that I need a cell condition for +1. This is extreme spike at high, and that's going to be red. So equals 1, extreme spike at high. You see, Bill? And then you'll just do that twice. And then set the other one to extreme spike at low. There's a snapshot of those properties. And there's a snapshot of those properties. Bill, are you in the trading room? Okay. Yeah, send me an email and then I'll email this back to you. Send it to support and I'll send this to Clint to send back to you. And then you can just add the other indicator for the extreme spike at the low. All right. Yep, you're welcome. All right, guys. Any other questions? Mr. Deck. Yeah, man. I just, I was trying to get into that short and I was thinking, this was an ABC. Where was it? Let's go over that for a second. We were doing this in the room. I don't know what's going on here. So look here. I was trying to get into the short. We were talking about it. Tim had shorted it. Right? Yeah, Tim had shorted it right here and then got out of it right here on this bar. So we were right there. And I was saying, okay, well, we've made it back in a little ABC right here. Little mini ABC. I was thinking, all right, that's going to be A. This is B. We need to tick out that high. Just barely break that point of control, and then I'm going to get short. And right as I was waiting for that to happen, it hit the median line right here, and then did that right there, and totally missed it. So I was waiting for it to come back to, I think I was saying 48.12, 48.11, 48.12, and just didn't happen. So what are you going to do? Just cry all afternoon. So anyway, all right, guys, I'm going to shut it down. We'll talk to you again tomorrow, and we'll go over the Bloodhound templates a little more tomorrow. I'm going to finish. Everything has to be recreated for the new divergence indicator. It's so much better and easier to use, and it's just redid all the properties. It's so much easier to use in the market analyzer. You saw how everything was jumbled up with the relative volume in the market analyzer. All of that's been fixed in the new divergence indicator. So everything has to be recreated anyhow because of that. So I don't know if I'll be able to send them out, finish everything and send them out tomorrow before the training session on all of that, but I'll be working on that all afternoon tomorrow. So, all right, talk to everybody in the trading room tomorrow morning, and talk to the rest of you guys tomorrow afternoon. All right, bye everyone.